It means the fundamentals are very well intact. It means the enthusiasm that we saw post-election, because of the election outcome being favorable to economic growth and especially real estate tax treatment, with the 2017 Tax Reduction and Jobs Act more likely to be extended, is still there. But you're absolutely right. In the near term, we've seen a lot of our clients just pause for a minute to see what happens with tariffs, to see what happens with the economy. The slowdown is now beginning to sound more like a potential recession, although the data doesn't quite support that just yet. But there is more near-term concern. Once the dust settles with all of these kind of a week-to-week disruptions and the headlines and so on, I think those positive fundamentals and the essential enthusiasm that our clients feel will come back into the marketplace.
How about the lending market for commercial real estate today? If I wanted to go build a apartment building in Middletown, America, will my local bank lend to me, or do I have to go to alternative sources?
It depends very much by the project. So if we're talking about construction financing, that is the most difficult to get right now, because there is so much more caution by lenders than we've seen in normal times. However, on the flip side of it, there's way too much worry about distress sales and distress becoming contagion and banks having to mark down lots of portfolios. Have not seen it. Because of the fundamentals being healthy and lenders not being motivated by marking to market and dumping a bunch of product at a big discount. And you have to remember, commercial real estate is vast. It's not just office space. It's retail, it's apartments, it's self-storage units.
Well, let's talk about the apartment part, because in terms of building new supply, talk about uncertainty. It's a labor issue, it's a lumber issue, it's a steel issue, it's a supply issue. I mean, that is material risk for that sector.
Very much so, but any more constraint on new development is actually positive for the industry, because we've been building a lot of apartments over the last few years. Before all of this tariff talk, we saw a 50 to 70% decline in permits and new construction starts in the last, let's say, 6 months or so, which is very positive for the industry, because there was some overbuilding going on in about 5 or 6 metros. On the office front, I have to say, especially here in New York, most of your audience probably is unaware that the office market is actually coming back a lot faster than people would have expected. Just here in New York, the second half of 2024 showed the most absorption of office space we've seen since the pandemic recovery. Actually, about 8 million square feet between downtown and midtown Manhattan were absorbed in the second half of 2024. Vacancies came down more than a full percentage point because companies are making such a push to bring people back, and the economy is still expanding.
Have we seen any real distressed sales in New York or Boston or San Francisco, a building that we'd all know, and oh boy, it just sold at 50 cents on the dollar? I haven't seen too many of those stories.
Okay, but just to point out, he really wants to see these stories.
I want to see these stories, because that for me will be
You've asked me about that before.
The bottom of the market. You know?
Sure, there have been, but it's limited to obsolete, older office space, usually in urban markets that cannot be reused. Anything that has a chance of re-tenanting, being renovated, is not in the category of bargain basement pricing. It's only the true obsolete office product that we've seen. Some older shopping centers too, but not.
I get pitched by friends,
broadly.
my real estate friends. Got a new fund. We're going out. We think we're close to the bottom. I'm like, I'm not giving you anything, because I'm not sure where we are. I haven't seen that story that's going to mark the bottom.
Well, that's the thing, is that we always wait for it.
I know,
and then everyone always says
it.
it's a good opportunity, and then all of a sudden it just never seems to materialize, or it's that one-off that we didn't. That we
I'll have to tell you, the opportunity funds that have been formed in the last 2-3 years in anticipation of this big buying opportunity have been very frustrated.
Yeah.
So there's situational distress, but there's no systemic distress.